So today, I'm going to be talking about 5 stocks. Now, there's more that I'm looking at. I can only buy so much, obviously. But let's get into it, okay? Number 1 is good old Hood, Robinhood, okay? I've talked about this stock in the past. I've made a few videos about it, and I'll probably continue to make videos about it. But Robinhood is an amazing company, and it's growing very fast. For some highlights, Hood reported a 45% revenue growth year over year, so they're growing really fast. They made almost $1 billion this last quarter. I don't know if I have to say this, but if you don't know what Robinhood is, it's an online brokerage. They're also getting into banking this month, actually, which is super exciting. You can buy, sell stocks, you can invest, you can pretty much do anything that a normal brokerage can do, like Fidelity. But they've gamified it in a way where the UI is beautiful, it's super fast and convenient, and they're trying to become a one-stop shop basically for your investing and monetary needs. So they're getting into banking this month. They have a credit card that gives you 3% cash back that you can invest back into the market, which is good for us and good for them. And they also allow you to buy crypto on their platform. So overall, it's just an amazing platform. I don't use it personally for most of my investing. I have a little bit of money in it. I use Fidelity, but I've been considering switching to Robinhood for a while. Anyway, let's get back into it. Robinhood reported 45% revenue growth year over year this last earnings report, which is insane growth. We've seen a huge run up from $30 all the way to $115 was, I think, the high. And so we're getting a pullback. Today it's about 104 at the time of recording, or 102. Could this dip more? I think it could. I think it could get to $90 per share, in which case I'll be buying, because I think even at a $95 to $100 billion market cap, I think this is a $1 trillion company in the making. Obviously, that will take years to come to fruition, but I really do think that this company has the potential to be truly a one-stop shop for all of your investing and financial needs. They have a trader event coming up in Vegas where they'll probably come out with some new products all around trading and investing on their platform, which is exciting because we've seen in the past when they come out with innovative new products, they tend to move the stock. We saw that when they had the crypto event in France, their stock kind of skyrocketed after that. So that's exciting. And then also, this month, most likely we're getting rate cuts from the Fed. So rate cuts are both good and bad for them. It hurts the amount they make on interest, when investors are using margin or credit cards or any of that other stuff. But it also helps Robinhood at the same time, because usually when Feds cut the rates, then people get more interested in wanting to spend more money, invest more, use margin, all of that good stuff. So I think we will see more trading volume towards the end of the year and more excitement around this stock. And, even though we've ran up a lot this year, I think, there's still room to run if they keep innovating and keep executing. So I'm excited to see where that goes. And I already bought some kind of on the way down, and we'll see if I have any more money to buy some more before it goes back up. Number 2, second stock I'm buying, SoFi. Okay, this isn't a stock that I've talked about a lot on this channel, but so many other YouTubers make content about SoFi. It's kind of like a retail and YouTube favorite for many different reasons. Back in April, it hit like $9. It was hitting $9 to $10. And I had bought it in February, which was, if you remember, a high. It was like an all-time high for a lot of the market. I bought it around $18 in February, and then everything tanked with the whole tariff situation. And so I bought the dip on the way down a little bit, but I didn't know much about it, and I wasn't researching much about it, and so I kind of just decided to sell it off, put it towards other stocks, and I kind of wanted to see it perform a little bit better. I wanted to see their numbers before I decided to jump back in. Now, if I would have held at $9 and just rode the stock all the way up, I would have been up a lot more. But at the same time, I didn't have that much invested anyway. It was like less than 1%. So I'm getting back in because I think there's so much more room to grow, right? We're kind of at a $25 price point at the time of filming this video. And I think the market cap's around 30 billion. And so I think this has the potential to get to a few $100 billion market cap in a few years, obviously. But their growth is similar to Robinhood. They're growing at 40% year over year, which is really exciting. They make a lot of money off of their loans, their loan platforms. I want to do a little bit more research on this name. I don't plan on making too many videos about it just because the YouTube market is oversaturated for this name, but I do like it as the potential to be a bank that more people my age use, kind of similar to Robinhood, where, my generation isn't using as much as the Charles Schwab, Fidelity, kind of the older brokerages. They're kind of leaning towards Robinhood, even Webull. And so SoFi could be that similar transition from Chase, Bank of America, Wells Fargo, like the older generational banks, to more online, technology-based banking systems. And that's what SoFi is, right? I think the main tailwind right now and why the stock ran pretty quick from like 15 to 25 is rate cuts. Okay, we're most likely getting rate cuts in this month, and then hopefully towards leading into the end of the year, which I think is why the stock rallied. And they make a large portion of their revenue from loans, and so rate cuts are exciting because it will get people to want to take out more loans with a lower interest rate, and then also refinance their loans, their mortgages, car loans, credit card loans, pretty much everything. And so, yeah, maybe the company doesn't make as much from the interest, but they also get more customers, more interest in their loans. And so I think that is a positive tailwind, and people were excited about that. Another thing is they're also coming out with crypto products and blockchain payments transfers to foreign countries. So they revealed something pretty cool here. SoFi partners with Lightspark to power blockchain-enabled international money transfers. And so money transfers are notoriously annoying, cost-heavy, especially if you're sending a lot of money. And so SoFi wants to innovate that aspect of, international payments, where they would use the blockchain to initiate those transfers. And so I think that's a really exciting thing that they're thinking forward of how they can serve their banking customers from a crypto and technology point of view. And it's similar to what Robinhood's doing. And so, Robinhood is at a $95 to $100 billion market cap. So it's ran up quite a bit. Like I said, more room to grow. But SoFi is only at a $30 billion market cap. Now, granted, they don't move at the same rate because, Robinhood is, I think, a little bit more innovative, and SoFi is a little bit seen more as a bank. But either way, SoFi has more room to grow from this point forward. And so I am investing a bit of money into SoFi. Even at this level at $25, I think it's still a worthy investment. Should I have held from $9? Absolutely. But I'm not a perfect investor. And if you held, good for you. I'm proud of you. I still think it's a great investment from this point forward. Number 3, Hims. Okay. Hims has had a heyday with the media. I'm just kidding. Hims has been left for dead, essentially because of the suing risk from Novo Nordisk. If you don't know what happened, basically Novo Nordisk and Hims partnered up so that Hims could sell Novo Nordisk's Wegovy semaglutide, basically the fat loss drug is what Trump called it. And then Novo Nordisk pulled out, and they're like pissed at Hims because they claimed that Hims was selling compounded semaglutides under the guise of personalized care, but it wasn't really personalized. And if you don't know, in the US, you can only sell compounded semaglutides or GLPs, basically the fat loss drug. You can only sell them compounded versions if they're personalized, which Hims does. And they also have a very large emphasis on being legal about it. Okay. And so what happened is Novo decided to sue like 14 different companies who sell compounded GLPs, claiming they're not allowed to sell them because they're not personalized. And then also Eli Lilly decided to do the same thing and sue some companies as well, because they sell Zepbound. Okay. Basically, investors got scared because Hims could get sued by Novo Nordisk. The interesting thing is Novo Nordisk sued 14 companies, but not Hims. My personal thinking on this is they probably wanted to sue the other companies first, see if they could win, and then using that momentum, sue Hims. But we got some kind of good news yesterday, with a Eli Lilly case. Basically, a judge threw out a case of Eli Lilly trying to sue a company called Willow Health, saying that the drugs actually are personalized, which is huge for Hims. And we can see here, Hims and Hers rose more than 8% in early trading Wednesday after a judge dismissed a lawsuit by Eli Lilly challenging a different telehealth company that sells knockoff versions of its GLP-1 drugs, which is the compounded versions. Hims, the only publicly traded company among its peers, does not sell copycat versions of Lilly drugs, but it does sell versions of Novo Nordisk's competitor weight loss drugs. Blah, blah, blah. Both Lilly and Novo have sued smaller companies that sell compounded versions of their patented drugs. On Tuesday, a judge dismissed a case Lilly filed against Willow Health, siding with the telehealth company's argument that its versions of the drugs are in fact personalized, which is the same argument Hims has made when Novo has publicly accused of its illegal behavior. So if a judge is throwing out that case, then investors thought, okay, well then Hims is selling personalized compounded drugs, so there's no suing risk, or there's less suing risk because the judge doesn't care about the other case, which is basically the same situation as Hims. So, in my opinion, Novo Nordisk is a falling stock. I think Hims has a bit more upside and a bit more potential in the US. They sell more than just GLP drugs. And Hims earnings also dropped the stock a bit for missing the analyst estimates. Regardless, they're still growing at 72% year over year, which is crazy growth, okay? Their growth slowed a little quarter to quarter, but I'm not too worried about it unless the trend continues, okay? And we can see this here. If we look up Hims, I'm using Fiscal AI. which is a really nice platform to use to kind of show this here. Quarter over quarter, if we're looking at billions here, or sorry, millions, as we can see, they've had a nice uptrend pretty much every quarter here, growing more than 40% each quarter. And last quarter, we got 110% year over year growth, which was insane. And so this kind of scared people, seeing that there's a less revenue basically this quarter. But I don't see an issue because they're still growing 70% year over year. Okay. Now, if this is a downtrend, we start seeing less and less revenue each quarter, then, maybe there's something to look at. But personally, I'm not too worried about it. I think this is probably the best. For me, this is one of the no-brainer investments because the stock was down farther than any other stock that I've looked at. It's at $41. It's reached $75, I think, or $72 was its all-time high. And we've hit $65 on the stock a few times. And so, buying at these levels at $40 to $45 to $50, I don't think is a bad investment, because I see this stock going quite a bit higher in the future. And so, we've seen quite a nice run up with HIMS over the past few days here. We hit $41 on the stock all the way down here. I should have bought, but I didn't. And then it just started to run up on that news of the Eli Lilly case getting thrown out. And so from, Tuesday, which today I'm filming this on Thursday, in 2 days it's ran up 17%. Okay. In 2 days it's ran up 17%. Okay. And so I think this goes higher. I think the suing risk from Novo Nordisk is really not an issue. I'm not a financial advisor. This is not financial advice. So do your own due diligence on the situation and the case and the whole controversy. If you want to invest in HIMS, I definitely recommend understanding that a little bit more. But for me, this is a good growth opportunity. I think HIMS either goes a lot higher or to zero, and I don't really see this company just going bankrupt, especially with the amount of growth that they have. Okay. All right. Number 4, Applied Digital. I've talked about this stock quite a bit on my channel. It's kind of like one of the main ones that I've talked about so far. Granted, my channel is new. I haven't been investing for as long as other people have, but Applied Digital seems like a no-brainer in my opinion. Okay. So my main investing thesis right now kind of falls under a few umbrellas. Okay. Number 1 is finance, fintech, and crypto. That's kind of what's exciting me, is the innovation of the financial kind of industry in the US. That's kind of one side of my investing thesis, which we've seen with, SoFi and Hood. The other side of my investing thesis is all about the AI data center build out. And I think that this build out will continue for the next 5 years. And I think it's going to be a great investment opportunity. A lot of people are saying the AI bubble is real and AI is not, is going to crash, and all of these things about how AI isn't real. There's a bubble. We're going to see a huge correction. And although there might be somewhat of an AI bubble, I think there's still opportunities. And I think AI is a real thing that we're going to be using in the next 10 years. Okay. The reason I say that is because these large companies like Google and Nvidia and Microsoft and Meta, they're investing tons of money into the AI data center build out, like billions and billions of dollars. And, people are using these products. Okay. So I don't really see this thesis of, it doesn't exist. With the AI data center build out, we're going to need data centers. And I'm excited I found something like this. There's a few different companies that are doing something like this, but Applied Digital basically builds and rents out their data centers. They're growing at 41% year over year. Granted, they're not making a ton of money, a few million, but their growth is going to ramp up substantially because they just got a CoreWeave deal worth $11 billion over 15 years, which would basically increase their revenue into triple digits year over year. And so, starting 2026, I believe their revenue growth is going to be in the triple digits from the payout from CoreWeave, basically. And I think, that's just one client. I think they're going to be able to get a few different hyperscaler clients that will either want to build a full data center or rent them out. Applied Digital also was able to basically lower their building time from 2 years, from 18 to 24 months down to 12 to 14 months, which is basically halving the time that they need to build a whole data center, which will, basically increase the amount of data centers they can get out and also the amount of clients that they can rent to their data centers, basically. They recently just broke ground on a $3 billion data center in North Dakota, which means more growth is coming along. They're only sitting at a $3.7 billion market cap. At its highs, I think it was at like a $4 billion market cap. We can see here we got up to, I think the high being around 1750. Right now it's at 1430, just with this overall market September sell-off. I think it's still a great opportunity to invest in Applied Digital at this level because, a 10x would only require the stock going to a $30 billion market cap. And if they're making $11 billion over 15 years with even one or two more clients, they'd be making more than $1 billion a year. And we see other companies that are making $1 billion a year with insane market caps. Like Palantir makes $4 billion a year or so, and they have 100 times price to sales. This is no Palantir, obviously, but you get the point. So anyway, I'm investing with the mindset that this thing could go higher. This is a long-term hold. The company, isn't profitable yet, but I think with a few more clients, they'll get there. We just need to see more deals, more build out. I think this stock could go a lot higher. Number 5, a stock that I haven't talked about in any video yet, and I actually think my next video is going to be about this company. It is Bloom Energy, or BE, okay? Now, I kind of want to start with the stock performance. I first heard about this stock when they announced a partnership with Oracle. And Oracle is a company that I'm also invested in that I really like. A lot of people think it's a giant, like a sleeping giant, basically like a kind of a boring dinosaur. And although they have that segment of their company, I do think that they'll be a pivotal part of the AI data center build out, and that they'll be able to offer that compute for kind of the larger companies. And I think they're on their way to become a $1 trillion company. First thing I heard about this company was a partnership with Oracle and Bloom Energy. And so this was kind of the moment that we saw that happen right here. It was at $27 and it immediately started running up. And I mean, this thing has not stopped running. And so I immediately bought a few shares at I immediately bought some shares around the $32 range. I didn't expect this thing to go up so much. I mean, 100% in the last month. Sorry, 2 months. I didn't expect this thing to run up so fast. If I would have known, I would have bought more. I thought it would take a little bit longer, but no, this thing has just not stopped. And so I'm a little PO'd about it, but maybe I should have just had more money. My bad. Anyway, whatever. This thing has gone up 100% in the last 2 months. So if you're buying at these levels, you either have to be prepared for a pullback. And by pullback, I mean, 20%, maybe back to 40. Or have the long set mindset that any pullback doesn't matter, this thing is going higher. I'm of the mindset that I don't really care where I buy this. I think it's going higher. The market cap is only at almost $13 billion. I think I bought it at, $6 billion? It's only a $13 billion market cap, which is relatively small in the grand scheme of market caps and companies on the stock market. And so let's talk about what Bloom Energy is. Now, I'm not going to go into insane detail here because I want to make another video about it, but basically they offer sustainable energy for data centers, okay? And like I said, I'm on that data center build out investment thesis. So instead of relying on outsourcing power like we've seen other companies do, Bloom is kind of like a technology company that helps data centers rely on their own energy, okay? So recently we've seen companies like Meta purchase, a 20-year contract with Constellation Energy, which I'm bullish on, for basically power over the next few years. Constellation Energy deals with nuclear energy. And so that might take a little bit to come to fruition, but we've seen that these companies are building out data centers and then trying to build them out where there's energy available, especially sources like nuclear energy, okay, which has kind of been beaten down. And I'm going to go into all of that over the next few videos that I make. But basically, Bloom Energy creates these kind of like fuel cells. Well, let's just read what this says. Bloom Energy Saver generates power on site, converting fuels like natural gas, biogas, and hydrogen into electricity without combustion. It can be installed and operational in as little as 3 months. So if you're a company that has a warehouse or a building or even a data center, they're wanting to kind of build this sustainable grid for you using their technology that will basically be a hedge against both rising electricity costs and outages. And, with the whole AI data center build out, there is going to be an increase of electricity costs and power grid costs. And we already see that happening. Right here, there's a Goldman Sachs headline that says AI to drive 165% increase in data center power demand by 2030. So it says Goldman Sachs research forecasts global power demand from data centers will increase 50% by 2027 and by as much as 165% by the end of the decade. Okay. So in that case, we need the energy. If you believe AI is a real story, and not even LLMs like ChatGPT, and I mean like robotics, self-driving cars, these things will need a brain, they'll need a data center. The bottleneck is energy. And so I'm bullish on other forms of energy like LNG, liquefied natural gas, companies like Venture Global, Cheniere. I'm also bullish on nuclear, such as, utility companies like Constellation or Talon. And I want to make a video about all of those companies. I'm bullish on them. Bloom Energy is the main one that I've decided to put more of my capital in, just because it's at only a $13 billion market cap, and they're kind of focusing on how they can solve the data center power bottleneck, right? That we're going to see over the next 5 years. Right here, they have this report about energy and power, and it says power access is the top driver of data center site selection. When it comes to data center selection, 84% of the respondents put availability of power in their number one rank. Okay, so that is the main concern when building a data center, is where are they getting the power from? The reason I like Applied Digital so much is because they've kind of done a great approach where they only build their data centers next to the renewable energy hubs, basically wind power, solar power. I'm sure in the future, nuclear power. Maybe they'll even invest in Bloom technology, Bloom Energy. And so I like Bloom because, it's not just a fake company. They are building these grids that are on site for different customers. You can see the customers they have here. They have a list on their website, and I recommend you do your own due diligence on this company. Look at their website. They have so much information. And I might make another video about it, but they have deals with Oracle, Walmart, a lot of other companies, right? And you know what? They're making a good amount of money too, which I'm using Fiscal AI for this, which kind of helps kind of visualize how they're doing. But they're making a good amount of money, more than I actually expected them to make. They're making about $1.5 billion a year. And for a company with, a $12 billion market cap, I don't think this is a crazy valuation, with the potential that, if data center power demand is going to increase 50% to 150% basically, then I think this thing goes higher, especially if they're innovating a technology to help data centers and other businesses, companies, buildings, whatever, to be sustainable. This stock can go higher. And so, quarterly, year over year, they're actually growing pretty well. It fluctuates, but, the past few quarters we saw December 2024 earnings 60% year over year. The next earnings report 38% year over year. Next one 20% year over year. So, I think with an Oracle deal, and then if we get more deals with more data centers, more companies, and especially with this bottleneck of energy, people will be looking to instead pay these utility companies that are raising prices. They'll want their own energy. And I think this is where Bloom Energy comes in and steals market share. I'm really excited, okay? And this stock has rallied 100% just in the past 2 months. Like I said, it's gone up a lot. Invest with the mindset that this could fall. If it falls, I'm going to buy more. But the momentum is there. It just hasn't stopped, okay? So I'm really excited about that. Overall, okay, those are my 5 stock picks that I'm focusing on more than others for this September slump that we're going to be probably seeing. I think that if you invest right now during this month, you might want to be prepared that stocks could go lower towards the end of the month. That's just historically the trend that happens. Now, since we're getting rate cuts most likely this month, it could signal some bullish behavior. And so, I wouldn't be too bearish enough. But I think towards the end of the year, we go higher. And I think the stock picks that I mentioned today will continue to grow. Some honorable mentions that I'll also be looking at during this dip include IREN, which is kind of like another data center play similar to Applied Digital, Nebius, CoreWeave, where they were a Bitcoin miner. Now they're leasing out their compute for AI data center. And so Applied Digital is kind of doing that. They're kind of more building it out and then also renting it. IREN has data centers that they're renting out. So I think I'm going to look at that company a little bit more, do some due diligence on that one. I just don't like the Bitcoin miner aspect of it. Another one that I might look at is BMNR, Bitmine Immersion Technologies. Basically, it's an Ethereum treasury. So if Ethereum goes up a certain amount, BMNR is supposed to go up more. It's kind of like MicroStrategy, but for Ethereum. Tom Lee backs it. I think I'm interested in it, but you have to have a real strong thesis on Ethereum, which I am starting to build. I'm invested in Coin and Hood, so I don't know if I want to be that over leveraged in the whole crypto market in terms of my stocks, but we'll see. We'll see. I also might look at TEM, Tempest AI. Not sure what they all do, but might look at buying that. And then also Reddit. Reddit hasn't fallen too much. They've rallied more than 100% over the last, month. I had the thesis for Reddit a long time ago, and I should have invested, and I didn't, and kind of ran past me. So I'm interested in Reddit. Just not sure at these levels if I want to invest, so we'll see. But anyway, guys, thank you so much for watching. If you liked what I talked about today, please consider liking the video. Subscribe for more content. Like I said, I'm talking about finance, crypto, fintech names, and then I'm also talking about the AI data center build out with a little bit of hymns here and there. So if you're interested in those names and those industries, give me a follow. I'm not an expert on anything. I just do some research. I basically regurgitate what I learn, and I'm a long-term investor focused on these growth names. And so I hope that I can maybe help people research these names and make some money off of them. Anyway, thank you guys so much for watching. We'll see you on the next video.